Hey everybody, Joshua Phillips here with Churchill Mortgage. It is August the 9th. Holy cow, the year is just flying by. I know for many of you, school's starting back. It's a super busy time, and maybe you're still thinking about purchasing a home and are interested in what's happening with mortgage rates. So let's get into these charts. As I show you every week, what I have up here on my screen is a chart that reflects the price of mortgage-backed securities, which is where mortgage rates derive their values. Now, all you really need to know to understand these charts is that green is good, red is bad, and the higher the security price, the better mortgage rates are doing. And of course, obviously, the lower the security price, the worse mortgage rates are doing. So as you can see, now let's start with last week. Last week's review was great. Hey, we're soaring. Mortgage rates are getting better and better and better, and we are hitting about the best rates we've seen in the last year. Well, what comes up kind of has to come back down a little bit. And so this week, we'll kind of get into this. These are Japanese candlestick charts, by the way. Google it or chat GPT it if you're not familiar with them. But, last week we kind of ended on this amazing high and seeing the really kind of coming up against the best rates we've seen in the last year. Well, this week, as you've seen, if you paid attention at all to economic news, it's been bonkers with the Dow Jones and other indexes just gaining and losing, a ton of value. Gold and silver, everything's been kind of just all over the place. And that's been no different from mortgage-backed securities. Now, as you can see here, not to nerd out too much on these charts, but these are what's called they're called moving averages. So this is like the 25-day moving average. That's the average of price of the last 25 days. We want to stay above that, but we probably not going to move too far away from that. So this is going up, but we really just rocketed too far out. And so this week we saw mortgage-backed securities get a little worse. It was kind of a bad week. Still, we are still on our upward trajectory with mortgage-backed security prices. So I still think that the outlook is great for mortgage rates improving, although I do believe it's going to be a slow improvement. Also, it's never just always getting better. There are some days and weeks where things get a little bit worse, some days and weeks where things get a little bit better. But on the whole, hopefully we're going to continue to see the trend of things getting better. As you've probably heard, the Fed's made it pretty clear that September 18th, they should be doing at least a 25 basis point, if not 50 basis point improvement in the Fed funds rate. Now, this is not mortgage rates, and you have to keep in mind that the markets absorb this news and anticipate it, and they go ahead and work it into current pricing. So when you're hearing about a 25 or a 50 basis point improvement coming in September, that's not going to happen in September. That is happening now, or has been happening. Last week we saw about a 0.25% improvement in mortgage rates. So don't expect that this is going to be like, next month all of a sudden rates are going to improve. They are already improving based on these future projections. And just to give you another chart, very similar to mortgage-backed securities, you can always look at the 10-year Treasury yield. We want to see the Treasury yield go down. As we saw, it's come down, down, down. It bottomed out about 3.7 something last week, and then the yield went back up today, 3.94. So that's something you can't pay attention to. We want to see the yields go down on the 10-year Treasury note. So anyway, well, as always, if you have questions about your specific situation, want to talk about rates and options, happy to do that. Also, always available to work on a pre-approval if you haven't yet worked on your pre-approval for your mortgage. Anyway, hope you have a great weekend. Again, still expecting positive trends, but there's going to be ups and downs within that trend. And this, unfortunately, was a little bit of a down week. Hopefully next week we'll be bouncing back up and have a better week. Anyway, take care. We'll be in touch. Bye-bye.